The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 25th. Terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, and I believe that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to call on in, 877-927-6648. Of course, internationally, 727-445-1044. You can always send us an email, steve@tfnn.com. Just inside that heading, put something in big, bold letters out there. That way I can grab it should it go into that junk mailbox. So let's go ahead and get this show started. Again, this is Terrific Thursday. This is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 75 points. She's trading out at 21,087. S&P up 11, trading at 2415. NDX 152 points. Russell's up. Russell's really flat out here, trading at 1382. Semiconductors up 6 points. New York Stock Exchange is up 20. NASDAQ Composite up 0.7%, up 43 points out there. The trendies are up nearly 0.7%. Gold is up 250. Interesting because you've got gold up. You've got the yen futures that are trading down, meaning that the currency, so they're kind of opposing forces. We have bonds to the upside, so we'll try to make heads or tails of what's going on there. Mining equities as a whole are pretty much to the downside. Silver Wheaton right now in the top 5 or 7 that I've got on my screen here. That's up 26 pennies. Leading the charge here to the upside dollar-wise. Well, it's Bitcoin. That's up 35 bucks, 8.5%. Amazon is up $17.51. It's hit a high of $9.99. That's just a temporary stop on its way up to its next level. That next level being $11.39.31, give or take a few pennies out there. So that's what, Amazon is doing. Priceline is up 16 bucks. AutoZone getting back into the zone. It's up $15. Google's up 13. Ulta Beauty Salon's up 10. To the downside, it's U-Haul. Americo company down 28 bucks at 7%. Genesco, GCO, that's down 23%. Core Laboratories up 5 bucks. Sanderson Farms, they're down $4. Pioneer Natural Resources off 4. Buffalo Wild Wings off about 4 bucks as well. So I want to certainly look at what you want to look at, which I imagine might be the market. So let's go ahead and begin there with regard to the markets and what's going on. Nothing different than any of the outlook that you and I had last week, right? When the market made its bottom on Thursday. In fact, we said, and many people laughed, that the markets were going back all the way up to the highs. Well, we've surpassed that in many cases out here. If we go take a look at the Dow right now, it's actually it depends on today's action. Let me turn off these market profiles for you. It's going to be an interesting close for sure. The reason that I say that is you can see a little bit of a descending trend line. So if the Dow is going to find resistance, it's say, now I'm looking at a weekly chart. Maybe it will look a little bit better for you if I put it on a daily time frame out there. There's your daily time frame. You can see that the Dow having gapped up above resistance. So old resistance, in essence, becomes new support. Now, it's got a horizontal level of resistance that it's headed for, which is all-time high, 21,169. Is there anything in the way of that getting done as we speak right now that says that it won't do it? Nothing that I see. And really, this ends up becoming more of a consolidation-oriented pattern until the Dow clears 21,169, clears it and stays above it. So at this stage of the game, we are going to make the call. We don't have any other choice but to make the call that the Dow wants to go ahead and tag that 21,169. Is it going to take it out? I don't know, but time will tell. If we go take a look at their TAS market profiles for the Dow futures, let's go do that. That's the way we're going to look at, in this case, I'm looking at 6120 daily and weekly. We can see that the weekly top of the box looks like it has been hit. Now, you have been calling for the Dow equity futures contracts to get up to 21,106. The actual high that we have seen is 21,095. So it is just shy. It is 11 points shy of actually tagging the number. Now, does it have to tag that number exactly? No. Will it go tag it? I think the only conclusion I can reach is yes, and we'll take that out. I think the conclusion is, I don't know. It'll at least get beyond the 21,106, should get beyond it. As long as price stays above 21,010, that's the daily profile level, then there's no reason for the Dow index to go tag, maybe close above the all-time highs. No reason for the equity futures contracts to, in essence, do the same out there. If we go take a look at the S&P 500, that's trading at 24.15. That's up nearly 11 points, about a 0.5% out here. What we're going to see is it is up and over resistance all over the place. Resistance 1 being back on the March 1st high. So it's up above that. A buck up, you'll know I'll get it out of my mouth here, up above the May 16th high out there. That was 24.0577. So this so-called somewhat bearish wedge out here proved to not be a wedgie pattern, at least not as of 1:12 in the afternoon. Is that a problem? Is there a problem? Where is the problem inside of the S&P 500? Well, if we go do the same type of thing out here and look at the ES Mini, and we go take a look at daily, weekly, the 120-minute profile, you're going to see green shoots everywhere, green barred candles. Now, that tells you price has cleared every form of resistance that is out there. 2404.50. You've been calling for a test of that area for gosh knows how long. Well, I do. Ever since last Thursday. And actually, I take that back. We had to adjust, right? You and I, we had to adjust the number to 2404.50 this week because there was a brand new profile that formed out there, and voila, price is now above that. So 2404.50 should be a level of support on any kind of a pullback. But right now, things are not mean and green. They're beautiful and green out here when you take a look at the ES. Now, there are some problems in River City out there. And that River City happens to be, we've got a slight divergence. It is not the kind that the bulls want to see out here when you take a look at the S&P 500. As you're watching us on TigerTV, because right now that's the only way for you to watch us, what we can see is your favorite equal-weighted ETF out there. That happens to be the Guggenheim. You know how you like to say Guggenheim S&P equal-weighted ETF. It's high. Closing basis high was on March 1st, 92.27. We're trading at 92.03. It is not confirming. This is just the S&P. The equal weight is not confirming this breakout. Something to think about. This is Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Hey, thank you to all the folks that sent the many nice emails yesterday, even this morning about yesterday's show. Yesterday's show, we had to do it just totally by voice. I had no access to charts that I could show you because the old internet system was down. They did get out here finally, and they were unable to track down the problem, which is a real bummer. And, of course, their suggestion was, and it was a pretty good one, but not one that I wanted to carry through with, was they wanted to change out the modem. And I said, maybe not so fast. The problem with changing out the modem is all of the other wireless devices. I years ago had this kind of thought, hey, why go ahead and make a common password? Why not use that big, long, no way for anybody to figure out the password on the bottom of the modem, if you know what I mean. And so that means all of the devices, the TVs, the other routers to expand the signals just to be able to get to all the areas in the house and everything else that goes with it would have meant what a nightmare. Now, it's a bigger nightmare if I can't actually do the show and get charts and things of that sort, but I just wasn't comfortable with the troubleshooting that the chap was providing. And I said, let's just go ahead and reschedule this appointment for this morning. And if the system is working overnight and through the morning, we'll just pass on that. So, of course, at any point in time, now that I talk about it, it could go on the blitz. But yesterday, we still did a show, right? We still did a show and gave you I hope the best overview that I could with regard to the markets, where they're going. Nothing has clearly changed there. Yes, we ended that last segment suggesting to we said, look, it's plain and simple. The equal-weighted ETF inside the S&P 500 was not confirming, has not yet confirmed this move. That can resolve itself by moving higher, much like in the case of the NDX 100, which has got messages confirmed all over the place. Now, as this one here, you and I took a look at last week, or maybe it was even the week before. Here we take a look at the QQEW out there. That's the upper portion of the screen. And because of Skype and everything, we're able to go ahead and bring these charts to you. And you're able to hear us. And so on TigerTV, you can see exactly what it is that we're looking at. And the bottom portion of the screen, the QQQ series ETF, the weighted version, the one that replicates the NDX, less fees, and so on and so forth. You can see this is a new all-time high, $53.99, as the NDX is. Now, I have seen once I've seen once where both of these are hitting new highs, and even though there was no divergence, there was a pretty decent correction. But most of the time, well, let's go 99.9% of the time, that is really not the case out here. And I'm going to go with the most of the time versus the one time, because there may have been something else that was going on, who knows what, at that stage. So the cues here just continue to want to move to higher ground. And if we take a look, and so we just took a look in essence by looking at the cues. We don't have to go look at the NDX 100 out here, but we can go take a look at the equity futures contracts for the NQ, see if we've got green shoots across the board here, and voila, we do. And here's the problem. The problem is there is the level of support inside each of these time frames, those being 60-minute, 120, daily, weekly. Man, it is like bon voyage to the the 50. What the heck do I mean by that? Well, what I actually mean by that is 57.44 is where you'd have to fall to. That would feel like a market crash. That'd be 45 points from where we're trading right now. That's at least where you'd have to get to. The real number, this is interesting on the 120-minute chart, and I won't be with you tomorrow, just so you know ahead of time. So if something were to occur tomorrow and who knows what, the market starts to fall apart, the number, because I gave you a lot of numbers yesterday, I'm just going to give you one number today. One number, that's it. That number is 57.1648. Write that number down. Write it on your forehead so you can look in the mirror and you can see that number, and you know that Steve said 57.1648 inside the NQ. You get it close below that, then there is spelling trouble in River City, meaning only to the extent that the annual seasonal cycle pattern, you try saying that just once, will have kicked in. Why do I say that? Well, interestingly enough, the bottom of that market profile and the center of the box are the same. And that should be a strong as a bull, I mean bull, level of support. And so you crack that little bugger. That means you probably will go ahead and move down into the, I don't know, 56.79, 56.37, 56.12, somewhere right around there. But that's not the forecast right now. But I do want to at least provide you with a very important piece of information. That's about as important one as I can find out here. Now, look, overnight, things may change. Things are likely to change, and even into tomorrow. But I got to give you the numbers that I've got now. A brand new set of profiles might form out there, a new supply-demand area, and then that 57.16 is somewhat irrelevant. In fact, it's totally irrelevant. It's just as simple as that. But for right now, for the time being, that's the best number that I can provide for you. The number that won't change, most likely, 56.7935. So there would be another level of support for you to take a look at. So as I take a quick peek here back on this chart, what else is there that is of interest? We've covered. Well, let's go take a look at the summation index, or really let's take a look at the advanced decline oscillator reading. So we'll go flip over and take a look at those. All above zero. But not by much inside the New York Stock Exchange, still above zero. Not by much inside the NASDAQ Composite. Is that a problem? It's a slight problem. Yeah, totally a slight problem out there. Again, looking for all these problems. I say problems. It's just it's a nuance. It's not. It's when I say problem, I really should be using the word. It's just not. It's just not the type of confirmation that you like to see out here inside the market. But doesn't mean that it can't resolve itself, because most certainly it can. And you know as well as I do, you remain above zero, that advanced decline oscillator reading. Well, then it's darn tootin' bullish out here, and that is the message yesterday, the day before, today as well. Until that changes, stay tuned until that changes out there. If we go take a look at the, speaking of things that are a little bit unusual, we should say. Hey, how about that Agent 99? You got the spot VIX index trading out at $9.99 out there. Probably headed for a new all-time low. Then everybody's skirt will get in a tizzy and so forth, and a lot of good that will do, skirts and tizzies out here. But there is a pattern that is a slight problem here. Not totally. But if we take a look at here, this chart here, the left-hand side of my screen, the data sometimes is as important or more important, quite frankly, than looking at the actual chart with plotted data. And if we take a look at the spot VIX index, it's up to $10.01 as we speak right now. And I go all the way out to December to look at the futures contracts. You'll see that the December futures contract trading at $16.37. So if we take that spread, that little contango, What a cool word that is. And so if we take a look at that difference, you're going to see right now there's a 63% difference between the spot fix and the furthest out futures contract. Now, the figure I like to see when you get to that topping area is about 80% versus 63.7%. Doesn't always, Stevie does not always get what he likes out there. Back here on the trading session of May the 8th, you got up to 78%. Hey, that's close enough to 80 as far, no, that was 65%. That was 65%. I take that back. Maybe we're getting close. Maybe. But we need to see an even wider spread here. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let me just check the old emails here, see if anybody sent in a request just as of yet, and the answer is no. So let's take a look at the New York Stock. One other thing here on the New York Stock Exchange, and then of course I haven't done anything on the New York Stock Exchange. So one thing on the New York Stock Exchange, where as far as where we're at 1:30 in the afternoon. Advanced decline line. That is the panel number 2 on my screen here. The reading on it is 400,947, 945. New all-time high. So again, the advanced, even though we took a look at the S&P 500, we don't have that confirmation out there with the equal weight taking out its highs. don't let anybody give you that kind of horse, manure that there's no participation in this market out here. It's just the absolute god-awful lie. It's a lie to suggest that. That's not to say that you don't have a few horses that are doing a lot of the heavy lifting out here, but to suggest that it is funky math. It is what the heck are they smoking by being even able to say something? And I hear that comment time and time again out here. Folks, there is broad participation in this move out here, and in the NDX 100 specifically. There are a lot of dogs in that race, and they're not even dogs. They're all beauty queens out there moving to the upside. What a beautiful, that indice may not stop for a long time to come. But we'll just take things one step at a time. Now let's go take a look at Goldilocks. I'm sure there's a few out there that would like to know what's going on with gold here. It's up $2.70. And, what gold is doing, you and I have watched this for the last several days out here. And if we take a look and check up on it today, you can see the bottom line, that price oscillator for gold, the difference between the 19 and the 39-day exponential moving averages out there. You can see it's really right at that zero line. It is trying to bust through. It is trying to break through that level. And if it does break above that level, with price trading above Stevie's red line out there, 1249 is the print on that, that's a very bullish move. You like to see a rising price oscillator, bottom panel, above zero. Right now we have a rising price oscillator below zero. So it says, okay, still have some more counter trend activity. What you don't want to see is you do not want to see gold close below that red line. You don't want to see that happen today. You don't want to see that happen tomorrow. And the reason that you don't want to see that happen is because then we would have a falling price oscillator below zero. And that would be basically bad news bears. It's not that it can't resolve itself to the upside. It's just usually when you get on one side, it's like a domino effect out there. And you don't want the dominoes to be falling on the wrong side. Now, how do you trade that right now? At this stage here, it looks like there's every appearance that it looks like gold simply wants to go ahead and continue to move north. But until this pattern tests and resolves itself, and yesterday was the test. Yesterday was most certainly the test. Does not, you can see it tested the red line, came back, rejected it. We're trading slightly higher, another test or two would be just fine. It's just you do not want to see a move below that. Now, in the case of silver, if I go try to find silver out here, let me go take a look at silver. It'll take just a moment to get through all these instruments out here and get to the silver chart. We're going to see individually, it's not, there we go, July. We're going to see that silver, similar in that we have a rising price oscillator, bottom panel, but well below zero. You can see minus 0.22 reading out here. Says more counter trend rally is in store. And silver would have a long way to fall in order to turn that price oscillator to the downside, which it could do, but it hasn't done it. And at this stage here, only if gold fails. Hey, I got something on my mind there, you can tell. Only if gold fails will there likely be a problem here for silver. So let's take a look at light sweet crude, right? Let's go take a look at it using the same chart pattern out here. So let's go see here, go all the way back up to the top now. And let's go take a look at the July contract for crude. And so you can see the crude actually looks, this is how important Stevie's red line is, right? If you just look at this on this commodity, if you knew nothing more than the fact that when price is trading below Stevie's red line, you should anticipate that there is selling pressure and price is likely to continue to move lower. Likewise, the opposite, right? As we have seen now, really for the past couple of months since March, we had a consolidation. And consolidation patterns, you got to spot those as soon as you can. They're the nasty things that will go ahead and chop you up to small little pieces out here. But once the consolidation pattern breaks, and boy, it's just a beautiful thing to go ahead and use this tool out there. Oh, I got a text message here. Maybe that's coming from Carlos in California would like to look at the Russell 2000. No. Do we have Russell on the line? Do we have Carlos on the line?
Hi,
Carlos,
Steve.
how are you?
Good morning. I'm doing very well, thank you.
Good to hear your voice. Now, you're trading the Russell 2000. Sorry about that. I'm not very good at multitasking, so my apology. But are you? Tell me what you're. Are you in? Are you out? Tell me what you're doing.
Yes, I'm sure the small caps.
Okay.
And I noticed that 1380 dropped a little support that it was there. My question is, at what level these small caps can be in a failure after this move that we have?
So if we take a look at, I don't know if you can see these charts on TigerTV. I hope that you can.
Yes.
Okay, great. Okay, so I have a 10-minute delay on it. That's the only thing. So price is going to be slightly different than what you are looking at. But the numbers are going to remain the same with regard to giving you the information you're looking for. And that information, your next move is so I'm going to do this. Let me just back up for a moment. So Carlos is short the small caps. Bravo to you on that. If we take a look at the pattern that it formed a couple of hours ago, in fact, it was at about 11 o'clock this morning. Price was moving higher in it. That's this little diagonal line that I have on my screen. You then had a nice little bearish reversal signal at 11 o'clock, little bear sash candle. And we can see that prices continue to trade below. It's tested that little oscillator unchanged line out there. So you don't want to see it close right now on a 30-minute basis above 1385. Anything below that is just a little bit of a counter trend rally. And this may extend itself even further. So since we go from 30 minutes, and I'm going to multiply that times 2 and go to 60-minute. Well, on the 60-minute chart, we can see that's the left-hand chart. We can see prices trading below that level. That also gives us a figure of 1385, basically, 1384.95. So now we have kind of two 1385 levels for you to focus on and pay attention to. That any counter trend rally up to that is okay, but any close above that, not so good. Now we just go from 60-minute to 120-minute. So your next level of potential support, which I believe is what your question was, should be 1375. And watch what happens at 1375. That would be on the 2-hour chart. Now that's going to be pretty good support here. If you notice on this chart, you'll see that the green, the blue. In fact, let me just turn price off here. Let me just do this because you'll be able to get a feel with regard to these profiles that you're looking at and see how when they form one above the other, that's a real nice sign of a bullish trend. If you can stay through this break, we'll talk about what happens. Okay, we'll talk about what happens if it gets below 1375.74. See Rhodes and Carlos in California. We'll be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're on the line with Carlos in California. So Carlos, the first number to pay attention to is going to be that 1375 area, and that's I'm looking at the 120-minute time frame chart. I just simply double that again and come up with the 240-minute chart out here, the 4-hour chart, and its level of support is at 1373. So that would become your next level. Now, these areas here, the 1373, the 1375, should be pretty strong areas of support. If those fail, then I would anticipate that price will get down to 1367.80. And it's going to be in that area where it could find some really strong support. So what's your plan for the weekend? Will you go ahead and hold on to this trade? Tell me your trading strategy here.
Okay. First, when I tried to short this position, I was doing a little bit of scalping to have some cushion on this position since yesterday. I was hitting it and placing my stop right below my entry, and unfortunately, I was being stop out, but with a little bit of profit. This morning, I was able to re-short it. So it depends. If today the future closes over 1380, I think I'm going to close my position. If by the close is 1380, because I can see in my 5-minute chart that 1380, 1383 it's kind of like a W, and there's a resistance right there that if close above, it'll make a small W and possibly will keep going possibly tonight. But I'm planning on, yes, but I'm planning on seeing if tonight the highs are attacked again, re-shorted again, and so I don't have to give back my profit.
Good. Okay, that's great. So on the 5-minute chart, and that's helpful. Thank you very much for reviewing that with me. On the 5-minute chart, there looks like there's an A to B equals CD to the downside that just may have confirmed here. So let me see if I got the volume. I don't have the volume tool up. But what I can do is give you the A to B equals CD down projection out here. And inside the TF, that right now on the 5-minute chart is projecting a price point of about 1371. So that becomes a potential price objective for you. And I think it's just a kind of a hard call with regard to tomorrow. If 1367.80 holds, meaning price close above that, I'd probably exit that trade and try to pick it up again on Sunday, depending on what might happen for you, because that should be really pretty strong support for the Russell 2000. The other aspects that I would be looking at and I won't be here tomorrow, would be seeing if any other levels have failed, predominantly inside the NQ. If we were to start to see some failures there, then that might give you some reason to hold on to the trade or something along those lines. So I think you might have to do a little bit of that in order to try to put this together. But it certainly is the place. It is the weakest indice for sure.
Yes.
In the case of the NQ as an example here, and I'll put the daily chart up on my screen. Today is going to confirm should confirm a Tom DeMarco TD sequential. It's just going to give us the 13 count. But Carlos, in order for this to confirm that signal tomorrow, 1, 2, 3, you'd need to see a close below like 57.01. I think it would be 57.01 or so, which is at this stage here seems like a long way down. You'd really have to see a nice failure inside of the NQ out here. Now that TD sequential count, when it confirms, I'm told that it has about an 85% probability of confirming a sell or a buy signal. In this case here, we'd be looking at the sell signal side of it. So I would say if you were to see a close below 57.38 in the NQ, to me that would spell some type of failure. So I can at least provide you with that information as of right now, maybe to assist you in your decision making in the Russell 2000.
Yes. Can I ask you something else?
Yeah, of course.
It's related to the month, the end of the month. We are practically today at the 25th. But
Yes.
at the time we come back, maybe a little bit more action, but I have the understanding there's window dressing coming. Do you think that will affect positively to the upside this market?
It certainly can. I would say I would look at it like this. What you and I know is that on a seasonal basis, the markets typically form a intermediate term top in the middle of May 19th to May 22nd this year. And so if we were to see some type of turn signals out here, I wouldn't be so concerned about window dressing in order to exit the position. In other words, you're in a pretty good spot with regard to your entry. If somehow we get some failures inside the other equity futures contracts out here to confirm a top, I don't think I would unload the Russell 2000. I would take your entry point, and stick with it, because what you described is a perfect description of somebody continuing to willing to try to poke around to try to find a top, and it took you a lot to do that. So to me, I wouldn't want to necessarily be shaken out of that unless I get some other signals that would say, hey, it's time to continue with the scalping process out here. So if your trade is working, then it should continue working into next week. Now, calendar-wise, what is that? Let me see here. So on Tuesday and when I wouldn't. Yeah, it's a great question. It's a great question. I just think that we're so close to when we should see a turn that if we do see a turn, I'd try to stick with it. If it were me, I would try to stick with it. And the Russell 2000 is the place, for you to be. It sure seems like that. But we just don't have any real. On an intraday basis, we had some confirming signals. In fact, what was helping you out inside the Russell 2000 was the same type of signal on a 30-minute basis inside the NQ, which, as you know, I like to pay attention to those seventh wave moves and price moving higher, doing less relative energy, and that's what took place at 1 o'clock. On a shorter-term basis, you would really like to see the NQ close below 57.78 to confirm that you should get some continued follow-through overnight and into the early morning out there. You don't want to see a close above today's high on the 30-minute basis just because it says, okay, things have recycled, they'll continue higher. So am I giving enough information, on both?
I think you're doing a great job. And what I do, everything you said, I replay it. Every time I call, that's what I do. And at the beginning, I get a percentage of what you explained. Then, because honestly, I have to go slowly, and I can repeat the recording from the archive, and that really helps me. But
Carlos,
you're very explicit. Thank you.
Hey, Carlos, I have to tell you, you're doing exactly what I did when I began this process. So I admire you for doing that, and I hope others follow in your footsteps. All right, my friend. Hey, have a nice holiday weekend.
Have a great weekend. Same to you.
You too. You too. Congratulations on the trade. That was Carlos in California. We'll be right back. So we're going to go take a look at ADP for our mountain climb. Alex, we'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So one of our mountain climbers, one of our denners, Alex, sounds like his trip is coming to an end, and he's going to be heading back. And so congrats on conquering the mountains. And so we're eager to hear all about it. He wanted us to take a look at automatic data processing out here. And from a longer-term perspective, we'll look at it from 3 different time frames, at least 3 different time frames. This, by the way, is the monthly chart for ADP. And, you know, it really works the same way. I'm going to take this other chart out here. And, you know, at this stage here, Alex, on a monthly basis, this month is an important month. The month is not over. As Carlos and I were talking about, it doesn't end until Wednesday. Ideally, you'd like to see ADP close above 102.27. Probably a little bit higher than that, because price has been moving higher, doing it with less relative energy, and this month could be your first bearish reversal candle. Of course, you know and I know that you would still need to see follow-through on the very next month out here. Other than that, the monthly chart looks pretty good. And the reason I don't want to do that is because, and it's above all types of monthly profiles, so there's no problem there. When we switch over to a weekly basis and we take a look at ADP, weekly basis on ADP shows us the following things. 1 year below Stevie's red line at 102.99. You'd like to see that taken back over. 2, you're also below the weekly profile levels out here. 101.87 is the number, and that should have been some pretty strong support, and it wasn't. The swing point that it's contending with, thankfully for you, is from January 2017, which had 19 million shares. And as this was tested, was 15 million shares back in May. If we take a look at last month, it was 15 million shares out here. So it doesn't appear that it has enough to bust through it. Those tests of swing points on a longer-term basis, as they are, this suggests to both you and I that what this really is in at this stage of the game is nothing more than a consolidation. That consolidation, in essence, being inside, for the most part, this yellow rectangular box, right? If you don't have enough to bust it down, bust through a swing point, well, then what's it doing? It's really consolidating somewhere in the vicinity of 95 to 105. So you've got a 10-point consolidation inside of ADP. Since it's in your long-term account out there, no big deal. I mean, that's what it's doing. Don't know how long you've held on to it or have had it, but that, in essence, is the consolidation pattern. Daily is back inside the gap that it had to the downside, which was on May 3rd, moved lower with 6.3 million shares. Maybe that was an earnings date, I don't know, but it has bounced back off of that consolidation area that was set up, you know, back in the December timeframe. You're back inside the gap. You're above a daily profile. That says you at least go fill the gap. Probably get all the way back up to the top of that consolidation. So, Alex, safe travels on your journey back. That is what ADP, Automated Data Processing, looks like it's doing on those timeframes out here. In the case of gold, maybe I didn't get to it, and if I didn't get to it, well, son of a gun. No, I did, right? Yeah, I got to it. We talked about how prices are going to come back. Sorry. It's like I can't remember, 2 minutes ago. And I only have about 30 seconds left. So, folks, I won't be with you tomorrow. I want you to have a great holiday. Rest up. The markets will be fun, as they are each and every day. So we'll be back at it on Tuesday for sure. At this stage here, there is nothing on the daily time frames to suggest to you and I that this market wants to start heading lower right now at 1:58 in the afternoon, nor does it suggest that it wants to head lower tomorrow. But you and I, we just simply recognize the patterns, and when the market reveals more information to us, we'll make the appropriate decision. Have a great weekend, folks. Stay tuned. David White will be up next, and hopefully on Tuesday we'll be back up to running with everything hunky-dory. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.